Okay, gold, here we go. On gold, we had a hard push down with non-farm payrolls today. We got below the 1295 here, 1295 and 1295.11. And when you break support, I like to look at J signal with trend. And as long as I'm below my 50 moving average and my 20, I'm going to take all J signals with trend. All J signals with trend as long as I'm below my 20 and 50 moving average. We went over this in the conference call for 1 hour last night. We have weekly conference call meetings on this. I only get concerned about the market getting strength if I get inside of the 20, I break through it, like I had a huge short on crude a second ago. We'll go over that in a second. So what we want to do is we want to take only shorts, 20s below the 50. I said we're either going to come back up here to 1306, low value area for a number 3 retracement, or if we get a J signal trend change, I'm going to take the first sell bullseyes I get. The first sell bullseye caught the high of the market for a 100 tick trade right here, $1,000 trade. Your maximum risk on that trade was 11 tick stop, 110 stop, $1,000 potential on the trade. There's your retracement, there's your bullseye. You had a red triangle in direction of the 5-minute trend. There's your bullseye. We get rolling down. Check this out. You can use the symmetry dots to scale. Use the symmetry dots to scale, big move. A blue triangle comes up. We ignore the blue triangles. We're not counter trend traders. We don't want to confuse traders. So we're going to wait for the next red signal. Red signal's got to come up. You don't want to take the blue signal. There's our red triangle. We take the next first bullseye retracement short. Nope, never got it. Blue triangle again. Sit tight. We're systematic about this. We know what we're doing. Red triangle again. Here we go. We're going 5-minute trend. Wait for the first retracement. It hasn't retraced yet. Wait for the first retracement short. Bullseye. There it is. Red bar, bullseye. Catches the high of the market, 89.5 again to the exact bar. At the high and the swing high. There we go again. Let the runner run. There's your symmetry dots, blue symmetry dots to scale. Now we're rolling down again. There's another bullseye. Don't have to take that one. We're still short, still worked, still short, still rolling down, still rolling down. I can go a little faster here. Then another bullseye, worked again, another bullseye, worked again. Hold on, keep working there. Let's wait till a trend change. Look at that big trade. Then we get a trend change back up. Don't take it. Moving average is still below them. We're looking for a trend change again with direction after big spread. We don't take these buys. We're not novice traders. We're not amateur traders. We're not counter trend traders. Then we get the overall, wait for it. Bam, there we go. There's the red triangle again. Now we're waiting for the first pullback short. There it is. There's our bullseye short again. There's divergence. Here I said 80 was the target all morning because it's big spread in between my charts. We're below market profile all morning. There it is. Catches the high again. There we go again. Oh, blue again. We don't take those. Don't take them. Use the symmetry dots to scale on that. We're out on that one if you took that last short. Wait for the red bulls. There's the red triangle again. Wait for the red bullseye. There it is again. Red bullseye, line in the sand trade. My black line's major resistance. There it is again. And look how it goes down to my 80 target. So the bottom line, guys and gals, we rode this thing down from 1295 all the way down to 1280. We didn't take any longs at all because we know if I'm below the 20, I'm below the 50, I take J signal shorts with trend. J signal shorts with trend. J signal shorts with trend. Now oil, go to oil, Gerald. Now what I educate you guys last week on J signal and also last night for an hour, I said, listen, if you get back inside the 20 and the 50 for the first time and you retrace back up on J signal, even if it's against the overall 50 and 20, it's going to try to catch the top or the bottom of the market. There it is. And that is knowledge. Knowledge is power. Knowledge is power. There's the high of the market. 50 tick trade. Your stop loss between 9 and 11 ticks, $500 for a $90 to $110 stop again. Okay? Knowledge is power. Let me show you the QM real quick, Gerald, before I take this off. You can use a QM as confluence on these CL trades. You don't have to trade the QM. Use it as confluence on the CL trades. There it is. There's a line in the sand trade that brought oil, the CL, straight up. That caught the high of CL, caught the high of CL, caught the low of CL, caught the low.